Good morning. My name is Vivian Arts, and I am proud to be the Women in Banking and Finance Advisory Board sponsor of the Accelerating Change Together program. I'm delighted to extend a warm welcome to you to the virtual market opening of the London Stock Exchange today. We are looking forward to the much anticipated launch of the Good Finance Framework, the culmination of a year's work during unprecedented times. The Good Finance Framework forms the first part of WIBF's Accelerating Change Together 4-year research program, designed and led by WIBF in partnership with the Inclusion Initiative at the London School of Economics and the Wisdom Council. The report focuses on the missing middle in the talent pipeline and proposes a range of actionable recommendations which organizations can take to reduce headwinds and augment tailwinds to help retain talent in the industry and allow women to move forward in financial services. But let me start by sharing with you why we embarked on the ACT research program. The answer goes to the heart of WIBF as a one-of-a-kind, volunteer-led, nationwide not-for-profit membership network, which has been championing women in the financial services sector for over 40 years. The inspiration and drive came from the engagement with our members in seeking to understand what are the pressing gender and inclusion challenges that they are facing in their ambition to ensure that we unlock the full potential of financial services for all. And the message from our members was clear and consistent. The challenge is the missing middle, the critical talent pipeline where we are seeing women's careers stalling or women leaving. Thought leadership is an essential and critical element to driving the vision for members of Women in Banking and Finance. So in November 2020, we released the findings of our quantitative survey in the Changing the Narrative report, which has helped to form the focus areas for the Good Finance Framework being launched today. Two of the standout findings for me in the survey were that women do not lack ambition, but they do lack the opportunity to realize that ambition. And women are continuing to lean in to progress their careers, but what we see is continued differences in outcomes. The Good Finance Framework being launched today is a practical, insightful, and cutting-edge perspective from across the sector, reflecting the experiences and realities faced by the talent within financial services during the extraordinary circumstances of the unprecedented challenges posed by the pandemic. The reality of today's launch would not be possible without the support of our sponsors, supporters, and WIBF volunteers. And so I'd like to take a moment to thank all the amazing volunteers who have helped to bring this groundbreaking report to launch, particularly Elise Badois, WIBF Head of Research, and Liz Hughes, WIBF Director of Thought Leadership, who have led this initiative throughout and have been superbly supported by so many of our WIBF volunteers, including Janet Lane, Patricia Gondom, Susan Monahan, Marianne Carroll, Chloe Hickey-Jones, Julia Smith, Alice Gaskill, Natalie Gill, Sharon Jeet Clare, truly a team effort. Before I introduce Dr. Grace Lordan, who will share with you the Good Finance Framework and report, I would like to address a few housekeeping matters. We're using Slido today to enable you to submit questions for our panelists. You can access Slido at www.slido.com, and the code for this event is capital letters WIBF 16. The event today is also being recorded, and a link will be shared shortly afterwards together with a copy of the report. And now I am delighted to introduce Dr. Grace Lordan, Associate Professor of Behavioral Science at the London School of Economics, Director of the Inclusion Initiative at the LSE, and lead academic on the WIBF ACT research program. Over to you, Grace.
Thanks, Vivian. Hi, everybody. I am really pleased to introduce you to the Good Finance Framework, which the sponsors of WIBF's Accelerating Change Together 4-year program have made possible. Creating the Good Finance Framework involved one-to-one interviews with 44 women who reflected on their own career and described their headwinds and tailwinds. We also held 2 roundtables which featured 35 women. In these interviews and roundtables, we intentionally focused on recruiting women for functions that had the highest shares of males, front office, income generating roles, and separately women who worked with more balanced shares of males in compliance and communications. I'm going to focus today on summarizing the good finance framework, which brings together the dominant themes raised by these women. If they described a headwind, an action is suggested to overcome it. And for tailwinds, an action is described that can artificially mimic their experiences to allow other women accelerate their careers and for us to retain the missing middle. There are two things about the good finance framework that I want you to note. First, some things may not be new to you. We think that it will help progress if what is being currently done in firms is evaluated for effectiveness, as the women that I met reported mixed experiences of exposure to D&I initiatives. Second, for the most part, the undercurrent of the good finance framework is moving the actions that help with the inclusion of talented women from compliance to culture. Strikingly, a decent proportion of the good finance framework centers around the need for managers to understand the value of including women, rather than quotas, audits, and monitoring. Quotas, audits, and monitoring are very necessary, blunt instruments that has yielded much of the progress we see today for women in financial and professional services. They are still needed now, but the final gender convergence needs more. The final gender convergence relies on managers who are attuned to the benefits of including all talent, including women, and a move away from structures such as presenteeism that do not serve business well. It also needs a movement away from signals that often allow someone get promoted, get a pay rise, and get opportunities that are uncorrelated with skills, talent, and ability. For example, talking too loudly and too long. Something I will try very hard not to do in this video. So let's run through the good finance framework. This is a new approach to inclusion in financial and professional services firms that can help all genders thrive at work. Do notice that in the good finance framework, every letter has a meaning and carries an action. Let's get going. G is for groupthink. Our research found that women are being talked over, being judged differently, and ultimately women's ideas are being discarded. Of course, what is being described is groupthink, and this is bad for business. An action to overcome groupthink is to audit meetings with this phenomenon and give managers tools to run meetings in a manner that is likely to circumvent groupthink. O is for opportunities. We currently monitor pay gaps. Some companies monitor promotions, but of course what determines these outcomes are the opportunities that are given to employees to grow. The good finance framework asks that firms get managers to audit the opportunities they give to each team member. This improves saliency and allows a manager to address any inequitable behavior. On-ramps and off-ramps. What was really striking about the interviews that I did was in all cases for women who had been on maternity leave, their onboarding and offboarding process was left to one manager. This important moment in the middle of a woman's career is too important to trust to one individual. Firms need to consider redesigning on and off ramps so they guarantee a certain level of experience. The D in good finance framework is for difference. Many of the women I met were forging careers beyond traditional career paths as a means of coping with traditional career paths being blocked because of cronyism. Firms can reflect on if and why women in their organization need to forge innovative career paths. But of course, innovation is really good for business. It should be nurtured and encouraged as a route to better business. F is for flexibility. Flexibility is still viewed in financial services as a way to get better work-life balance. It is hoped that some of this stigma will have changed because of COVID-19 lockdown. If we are really building back better, it should be recognized that there is really good evidence that flexibility actually enhances productivity. Conversations need to be had that align a more flexible working style with the operations of the business. I is for incentives. Many women noted that rewards in finance are still too individualistic. Women emphasized that promotion criteria had little to do with the ability to lead people, causing bad habits of familiarity bias, similarity bias, and cronyism to survive. The good finance framework calls for firms to include a team performance component for managers in their incentives package. Adding managers' skin to the game will ensure that the most talented people get opportunities over those with the tightest affinity. N is for networking. We all know the value of external networks, and this is even more clear for colleagues in financial and professional services. The women I met noted that many of the networking opportunities available do not open career advancing opportunities for them. There's too much talking. The good finance framework asks firms to shape an external networking platform so it brings together talented women with gatekeepers who can give them opportunities outside their own organisation. A is for advocates. It is no surprise that an advocate is not a mentor. The women I met discussed whether we can artificially recreate matching with advocates within the firm. The jury was out. We are recommending that some work is done to understand what determines a successful advocacy programme that has buy-in and momentum. N is for norms. It was highlighted by many that different norms exist for men and women in performance in financial and professional services. The women I met described that women are always perceived as either excellent or awful, with no room for being in between or dropping the ball. 22 of the women I met described experiences of mediocre men whose insecurities caused them to hire their friends, play office politics, and block talented colleagues' progression. Other differences in norms identified including how mistakes are treated and luck attribution. The Good Finance Framework encourages firms to identify the different norms that face men and women in their organisation and put in steps to mitigate them. Men and women should not have differential treatment. Finally, the Good Finance Framework ends by emphasising the importance of having competence and empathy for managers in financial and professional services. In our work, it has been emphasised that there is often trade-offs across these domains. Research has shown that soft skills, i.e. developing an empathetic management style, are more malleable than hard skills like competence. Firms can give themselves a competitive edge by investing in the soft skills of their manager, given that the leaders of the future will need heart as well as brains. And this gives us the CE to end good finance. Please check out the Good Finance Framework where the letters in the name convey an action. I'm now going to pass back over to Vivian. Thank you for listening.
I love the fact that the letters actually stand for actions, which is very much what we're focused on. Having heard from Grace on the learnings from the report and the recommendations made, I'm now delighted to introduce our distinguished panel of speakers who will explore further the findings in the report. First off, we have Grace on the panel. In addition to her role at the London School of Economics, we know that her academic writings have been published in top international journals in economics and the broader social sciences, and she is also the author of a new book called Think Big. I'm delighted also to be joined by Elise Badois, Head of EMEA Equity Research at Citi and Head of Research at WIBF. Elise was included in the 2018 Financial News 100 Most Influential Women in Finance list. We also have Gwyneth Nurse, Director of Financial Services at HM Treasury. Gwyneth leads the Treasury in relation to the Women in Finance Charter. Welcome also to Stephen Pegg, Managing Director of Commercial Finance at UK Finance. Stephen chairs an advisory group for the UK Government on creative industries and is also part of a minister-led Boards on Business Finance and Promoting Female, the Rose Review Board, and Black and Ethnic Minority Entrepreneurship. Welcome also to Sheldon Mills, Executive Director, Consumers and Competition at the FCA. Previously, as Senior Director of the Competition and Markets Authority, Sheldon had overall leadership and responsibility for the delivery of UK merger control and implementation of the new UK state aid programme. So an illustrious panel with us today. Thank you everyone for joining me. If I could actually ask Gwyneth the first question now that we've heard from Grace. For you, what actually surprised you most in the research, and how do you think this impacts or supports the Women in Finance Charter?
Okay, thanks very much, Vivian, and thanks to Grace for such a fantastic report and indeed presentation of it. Really pleased to be here joining the panel today. So just picking out something that did surprise me in the findings, it was the finding that women who work in environments with a higher share of women were more likely to correlate mistakes with being punished, while women in functions with a higher proportion of men were more likely to view mistakes as learning opportunities. Now, we speculated a bit about the reasons for that in my team, and we weren't entirely sure, but we thought it was a really nice illustration of why it's not enough just to aim for gender balance. firms also need to work really hard on building a positive culture, because at the end of the day, I think it is all about culture. And in the Women in Finance Charter, so we've been working on this for the last just over 5 years, I think. And as part of that work, firms have had to take a really good look at themselves. Do they really have a culture where everyone is encouraged to succeed, where they're making the best of all the talents? And I think having had to take a look at it and think really hard about setting targets which are stretch targets, but nevertheless maybe achievable targets. It's been interesting to see how much some firms who are, think they're trying hard, and they may well be trying hard, how much they are struggling to meet the targets that they have set themselves. And I think looking at the good finance framework and looking at the research may help firms to realize some of the things that they need to change. And what I really love about it is the fact it's got actionable things to do. It's a really actionable framework. So I very much hope that bringing the good finance framework together with firms that have signed up to the Women in Finance Charter means that firms can step to the next level in terms of driving forward and meeting their targets, and then everything good that comes from that.
Thanks very much. I love the comment there on culture, how very important it is. While we're on the theme of the Women in Finance Charter, Sheldon, I wonder if I could come to you, please. At the launch of the HMT Women in Finance Charter Annual Review in March, Nikhil Rathi spoke, and he commented that the FCA are working with the PRA on a joint approach to diversity and inclusion for all financial services firms. Can you expand on this and tell us what firms can expect to see coming out of this collaboration?
Yes, delighted. Thank you very much for inviting me this morning. And I think the report provides a backdrop and some incentive for us to crack on with the work that Nikhil was discussing. What we see diversity and inclusion across all characteristics to be central to our ethos and approach, both as an employer, as a public body, and a regulator. And what Nikhil was referring to was a piece of work that we are working with the Prudential Regulatory Authority on, which will consider how we can get the right approach to diversity and inclusion in some of our largest financial services firms, and potentially across all of the firms that we regulate. I think likely there would be 2 or 3 key elements to those proposals. One would be around representation, particularly at a senior level, but also we'll work building on our public sector equality duty and our objectives across both organisations around opening a conversation in terms of how firms can adopt a culture which improves diversity and inclusion, particularly around women and other characteristics within their organisation. So that can be as they work as an employer, but also how they serve communities with their financial services, with products and services. As part of that, we'll be considering whether or not for listings on the stock exchange or other listings, whether or not to introduce rules which ask firms to consider the representation at board level and executive level. So quite a lot of work that we'll be working towards, and you should see a consultation coming out within this year.
That's fantastic. It's terrific to see the regulator actually helping to drive the necessary cultural change within organizations as well. That's super. Stephen, could I come to you? How do you think that these findings will resonate with UK finance members and their customers, particularly in the context of your role at UK Finance?
Thanks very much, Vivian. I mean, amongst our nearly 300 member firms, small and large, there's been extensive support for the WIBF work and indeed involvement in branches right across the UK. For us, I think increasingly this is seen as a major strategic issue. There's been good progress on boards, but as the report points out, slower progress in the middle. For UK finance, we have a balanced board. We now have actually more women than men on the ExCo that I'm part of, but still a way to go in middle management. I think flexible working has been a live experiment for us all, hasn't it, through COVID? And many firms have been forced to confront the challenge of work-life balance, but also ensure that behaviours are inclusive. I think for all of us, what we need to do is then ensure that when we move to this new way of working, that change is enduring and actually begins to really filter through right through organisations. For the customer side of things, there's a close relationship between an organisation which culturally is diverse and able to engage with all of the different representation in its customer base and its commercial success. That should drive change in both directions.
Thank you. That's really helpful. It is interesting actually to consider how flexible working has been degendered during the pandemic. And I think one of the big learnings for us really is going to be how do we take forward the lessons that we've learned during this period of time going forward, particularly to make it inclusive. Elise, can I ask you a question, please? Some of you may have noticed that the FT has reported on the Good Finance Framework this morning, and they've commented on women's careers being held back by mediocre male managers, something which we've heard before. But what are the most impactful findings for you in the report?
Thank you, Vivian. I think this point that the FT picked on is obviously an important one, perhaps to some a controversial one. But it came through, and I think I'd like to go back to this is a two-stage program, and we did a quantitative analysis originally, and one of the things that came out there, and it surprised many of us, including me, is the sort of higher tolerance for mistakes from men than from women in financial services. And so we drilled down in that in the second qualitative analysis that Grace conducted. And one of the things she found out was this idea that culturally there's a higher gradation of performance for men, i.e. You could be described as perhaps an average performer, a very strong performer, or a low performer. But for women, it's very polarized. You're either this sort of fantastic, excellent performer, or you're absolutely awful and shouldn't be doing what you're doing. And I think, culturally, moving away from those stereotypes, I'm sure we all agree it's probably weird to imagine that this would be the case, that there would be polarization for one gender and not for the other. So actually that's one of the findings. But I think in terms of other findings that were really important in the report, obviously Grace highlighted the 10 points that were really going for. And I think this point that the FT picked upon was really this idea of norms, and we need to move away from those norms.
Thank you. That's really helpful. And, I think the first step to change is awareness. So it's been really good to actually raise awareness on some of these issues and behaviors that we need to address and change. That's super. Grace, you're our expert. In your view, what are the domains of the Good Finance Framework that you think will be of most interest to people?
So I think, Vivian, I'm an economist, and one thing that I've noticed through my quantitative work is that the wage premium for people who have enhanced soft skills have been increasing over time. So what that means essentially is that if you're high in competence and you're high in soft skills, the interaction gives you additional income than it did, say, a decade ago, when really what we looked for in managers was high competence. And I think what really kind of was very striking that came out from the conversations with the women that I had was that this is actually true, which didn't surprise me. But what did surprise me was that a number of the women highlighted a trend in the industry for managers, both male and female managers, to fake those soft skills. And I think this could actually be a mistake for the industry, to the extent that I can virtue signal and look like I'm embracing diversity and inclusion when in fact I'm not. So I'm not walking the talk. This could be something that's really holding us back. So I think the industry might want to kind of consider how we move forward with respect to giving managers the soft skills that they undoubtedly need to manage employees in knowledge work these days as we go into the fourth industrial revolution, and also coming out of the pandemic.
I think that's a really interesting one. I think I've also noticed that big trend in and shift in our sector, that competencies was the be all end all, and in fact definitely the soft skills now are a hugely important part of that role. But it's absolutely critical that we take that from being an intellectual understanding to a genuine behavioral activity, and genuine being what's absolutely key. Thank you. That's really interesting. Now, Gwyneth, could I come back to you, please, and ask you what are the top two most impactful or applicable interventions from your perspective, again in the context of the Women in Finance Charter?
Sure, thanks, Vivian. And I think actually the first one that I've identified really links to the points that that Grace was just discussing, and I think it's about redesigning incentives in order to drive real change. And this is something we've really seen through the Women in our work and the Women in Finance Charter. So I'm really pleased that the Good Finance Framework asks firms to reward inclusive managers. So bonuses are partially determined by the what the team think, the performance of the whole team. And I think the link to the Women in Finance Charter is there, where we've got the intention to link pay of senior executives to meeting gender diversity targets. And what we found is, of course, that has really changed behaviours, that when there are targets to meet, and I noticed that Grace said such things were blunt, which I completely agree with, blunt but necessary. The change in behaviours has been very noticeable through the research that we've done on the Charter. So I think that point about bonuses being partially determined by wider factors other than the raw numbers is really complementary to that. It's about the performance of the whole team. It's about bringing people on. It's about how that team feels. So it's not just about the number at the end of the day. And I think if firms could pick that up and really drive that, then I think it's got the potential to be really impactful. What you don't want is the numbers to be achieved, but there are lots of dead bodies effectively lying in the wake of that. That is not something which is going to drive a culture in which everybody can thrive and succeed. So very, very supportive of that one. And then the other one that I picked out was the one about on-ramping and off-ramping. And I think this is incredibly important in terms of the missing middle. And you need help when people are kind of leaving the workforce, thinking about women in particularly in the missing middle for a period of maternity leave, let's say, and then re-entering the workforce again. And I think what's so interesting about the period we've all just lived through is that many people will have perhaps had the feeling of being a bit dislocated out of the office, out of the regular routine that they've been in. And I wonder if this is an opportunity for everybody to really think about how difficult it may be to re-enter something, and for the first time having had that feeling. So I think lots of firms have kind of worked on this concept over time, but I wonder if this is an opportunity to really double down on it and really think carefully about how one reintroduces to the workforce when you're returning from a period of absence for whatever reason. And I think making that work could make a really big difference.
Thank you. I think that's really interesting. We talked a little bit earlier about the flexible working having dispelled some of the myths about flexible working because everyone has had to embrace it. And I think that's a really interesting observation that on the onboarding and the on and off ramps, that actually that movement back into the workplace, which we all are experiencing, not just part of the workforce, gives everyone a really tangible experience of the realities and the challenges around it. So that's really interesting. Thank you. The comments you made rather resonated with me with regard to the 4 pillars of the Women in Finance Charter. And I remember certainly in the early days, there was definitely an awful lot of concern about the one pillar, which was the intention to link the results to pay, and the amount of concern expressed about that. And yet we've all become much more comfortable with that and recognize that it is actually a very effective driver of change. And sometimes we just need to be able to drive that change forward, even if the instrument may be a little bit blunt. So thank you very much for that. Just a reminder to all of everyone in the audience that if you'd like to ask a question, please go to Slido, WIBF 16, and you can submit your questions there. Stephen, could I come to you? You're a member of the Rose Review Board. So how do you think that the findings in this report have an impact for female entrepreneurship, particularly barriers faced by women when starting a business?
Well, Vivian, there are close parallels, quite obviously, here to the barriers to realising the potential of female enterprise. Networks and gatekeepers play a very important role, advocates and incentives, and something we haven't talked about very much yet, which is in the report, which is pointing out the benefits to innovation, really, and the need perhaps to differentiate between the contribution of innovative people bringing a different perspective from perhaps being marginalized and considered to be niche or the only way in which those individuals can play a role. In terms of how we've approached the Rose Review objectives and investing in women, first of all, we've needed data. We've got a little bit more data, I think, on colleagues than we have on customers, although that's beginning to change. And it's not just data on numbers, it's got to include processes and outcomes. Secondly, it's about good practice. And there's real value in knowledge exchange and, dare I say, a bit of peer pressure, really, to show the benefits of those who are kind of making better progress. And then thirdly, communication. Some of the work that can be done, notwithstanding the ambition that exists across many parts of the business community, as well as our colleagues in financial services, require support to ensure there's confidence and the connections that they need. So, I do think there's a strong link there. We know that, reaching out in terms of supporting those businesses with real potential requires organizations to go beyond their usual practices and networks. And I think that's where this can really pay dividends both ways. We do need to see the gaps closed on the customer side just as much as on the colleague side.
Super, thank you very much. I'd like to just drill down into a specific question and issue that was addressed in the framework today. So Elise, I wonder, could you discuss specifically the challenges faced by Black women and the focus of that in the report that was published?
Yes, Vivian, obviously a very important question, given that Black women are the group of workers facing the biggest gaps in financial services. So I think in the report, really the focus is on the headwinds and the tailwinds that women were facing. And I think the biggest finding is actually that overall, Black women do not face different tailwinds and headwinds overall, but actually they face headwinds in an increased fashion and they have less tailwinds. So basically what we need to do, and this comes in the action points, is augment the networking opportunities, augment essentially all the 10 points we're making, we need to augment these tailwinds and basically reduce the headwinds even more than for the rest of the female population. So that's the first point I would make. There is a second point I would make. There is obviously a couple of women have mentioned obviously that they face very specific microaggressions. Just for the wider audience, microaggressions are a concept which is, it's a small thing you say in the office coming in the morning to someone, and it doesn't feel like a big deal. It's perhaps a joke or something, but accumulated, it ends up being really, really detrimental and really affecting you, your confidence, potentially your mental health. So microaggression are a very important concept, and obviously some of the Black women interviewed have mentioned that obviously they face specific they have specific issues with that, obviously.
That's really interesting, the microaggression piece, because I think it very much speaks to the culture of an organization. So although it's not a big thing, cumulatively, it actually really is a big thing. Stephen, could I come back to you, actually? Is there anything you'd like to share in addition on the focus on Black women and intersectionality particularly?
Yes, I think that finding that the issues are the same, but probably more intense is also parallel in the work we've looked at in terms of customers as well. And the intersectionality just kind of amplifies really those effects. What I would say is that nevertheless, the fact that people have had to face those challenges can mean that actually their determination, the different approach that they bring, can make them incredibly good role models. And one of the things we need to make sure that we do, alongside being honest about the barriers that exist, is actually promote the examples of success as well. Because I think that can inspire others. They've got to be, relatable successes. Individuals and organisations that feel close enough to be something you can learn from. But certainly, that role modelling, I think, is something which we need to celebrate and communicate.
And we need many more of those role models in order to inspire the talent coming through as well. Absolutely. Sheldon, can I come to you? The FCA is obviously doing some work to promote better cultures in firms, but how does the FCA ensure that it develops and embeds a unified culture across the UK financial services industry, given that we have large firms and small firms, and even within the sector, clearly different cultures and levels of progress in this space?
Yeah, I think we've set out quite a lot that we expect firms at their heart to think about their purpose and culture as an organisation. And I think one of the things that will define purpose and culture is not just achieving shareholder value in the bottom line, but it's all the components which go into that purpose and culture which allow you to do that. And your treatment of employees, your treatment of customers and your partners will be an important part of that purpose and culture. So the report is very good, as in a sense what it highlights is that firms do have a challenge with their internal culture, and likely, given that, probably may have a challenge with the way in which they serve women as customers as well, or as partners, or as entrepreneurs, etc. They do have an issue with this, as the report's outlining. And one part of what we would want all firms to do, whatever size they are actually, is to think about their purpose and culture specifically around the issue of gender. I think one of the things which strikes me, which comes from this report, is the lack of perhaps understanding of women, their careers, their lives, and how organisations can actually support women in their career journey and also in their lives as customers of the financial services industry. And I think a lot more thinking needs to go into how one develops a culture which is not just male-centric, it's everyone-centric, but particularly focuses on the needs of women.
I think it's a really good point, isn't it, that women in the financial services sector aren't just the employees, but they're also the customers, and it's really important to be focusing on that as well. Gwyneth, can I come to you and just ask you a further question? The research that's published today was carried out during the pandemic. We've all learned an awful lot during that time. What are your biggest D&I learnings during this period, and what do you think that Treasury will be doing differently as a result in future, and hopefully the financial service sector as well?
Sure. So I think it's been a tremendously interesting period, I think, for diversity and inclusion. And I think there are an awful lot of learnings to take out of it, principally, I suppose, around flexible working and how well actually everybody has done, certainly across the financial services sector, in making things work remotely when, you can't see people. Presenteeism is something that has simply gone out of the window during this period of time. But actually, as I was thinking about this question, the biggest thing I think that has helped diversity and inclusion, particularly on the inclusion side, and it's something which comes strongly through Grace's report as well, is that actually virtual meetings, I think, when they're entirely virtual, have enabled us to be more inclusive. So it has been a really interesting to adapt one's style to doing these meetings. And I think having the virtual meetings has made us more disciplined in terms of how the meeting is run. I think it has avoided the problem of certain individuals dominating a meeting by the amount of the interventions they make or the volume at which they're speaking, which Grace referenced in her introductory remarks. So we've been able to bring more different people into meetings and get better contributions out of them. And that has been a fascinating insight for myself, who, I would regard myself as being able to run a good meeting, chair it well, chair it inclusively. But it has been better as a result of this remote environment. And that is something I would never have predicted going into it. So I think when we are emerging out into the hybrid working world, something we're focused very carefully on in the Treasury is how can we retain those benefits, and how can we make that work where, let's say, half the people may be live inside the meeting and the other half are remote. How can we retain those benefits while still getting the most out of the live interaction that so many of us are craving? So we want to bottle what we've got and move that forward so we can make a step change. So I just thought that was something interesting for us to all think about in terms of the inclusion agenda.
Thank you. The dynamics of remote meetings certainly have changed how those meetings are conducted, and it's been quite interesting. Of course, you can't have the same physical maneuverings in the room as you have virtually as well, which is definitely a change. Gwyneth, could I just follow on with another question? Thank you, everyone, for sending your questions through on Slido. I've got a few here. Do you have any thoughts on the comments by many of the heads of major banks on the expectation that everyone should be back in the office soon?
So each firm is taking a look at these quite tough questions about how do we return, how do we build back better. So a lot of firms that I have personally spoken to, and I know the Minister has spoken to, are going for a hybrid working environment. But I of course understand that firms want to get people back. I mean, we want to get people back into the Treasury. The social capital that we think we've lost during this period is something, is something very important to us as an organisation. We've also had lots of people who have joined the organisation and have not had the opportunities to meet colleagues properly, to get into the building. So we want people to come back into the office too, but we want to do that in a way that allows people to get the benefits from the flexible working that we've all experienced. We want people to be able to, I suppose, manage their sites differently. There may be a smaller footprint in the future. So there are some really complex questions for all firms to consider. And I know every single firm, whatever the public utterances at the moment, is going through exactly this thought process. So I suppose the most important thing, I think, from the women in finance perspective, is we don't lose some of the gains that have been made during this period, this extreme period of remote working, and we make those lessons pay into the future. So that's something we are very focused on and something we are talking to firms about.
Thank you. So it's not so much returning back to normal, but returning back to the new normal and understanding what that new normal is going to be, having learned and embraced those lessons. Grace, I've got a few questions coming in on Slido here. Can I ask this one to you? It's actually a double. Do you think that flexible working opportunities can play a part in productive onboarding and offboarding discussions? And could it play a role for both genders as we move hopefully out of lockdown and into a hybrid working model?
I mean, I think, Vivian, the answer is yes and yes. To be very honest with you, I think the kind of caution that I would give with what I learned from the Good Finance Report, because it was actually surprising for me, is that some people still have really bad experiences when they're onboarding and offboarding. But once we get that right, we absolutely should have flexible working, not actually simply because it allows for better work-life balance, but it also allows people to be more productive. There's really credible evidence. So the argument for flexibility isn't just a work-life balance argument. It does allow for enhanced productivity. But yes, it would be absolutely wonderful if both genders were able to embrace paternity leave and the onboarding and offboarding process. And if we could elevate the experience, I think that we would get closer to that final gender convergence.
Super, thank you very much. Elise, can I come to you with one of the findings in the report about access to stretch assignments? It comes across strongly, both in the quantitative and qualitative research carried out. But what can companies do differently to help ensure that women do get these opportunities?
Thank you, Vivian. I think it's an important question because it's a very practical one. And in my day job, I have those questions. I think what firms have done well, financial firms, is essentially track and monitor the progress at very, how shall I call it, at the very official points of promotion. So when you're about to make managing director, when you're about to be promoted to a director level, to a vice president level, all of that is incredibly monitored. There are indeed programs to support women and minorities as they go through these formal moments, and it's tracked and it's very obvious. But essentially, progress happens on a daily basis, and it's very practical. So a practical example will be someone resigns, you're a manager, you're in a rush, you need to reassign the accounts to someone, and you're going to make that decision, and that decision will essentially make or break careers, because someone will get the right account and someone won't get it. Now, obviously, it needs to be performance-based, it needs to go to the best person, but it can also go to the sort of safe pair of hands, just the easiest person. And it's a big ask to ask every manager to be so focused every day on these stretch assignments. But this is what we need to move towards. And essentially, I think it benefits everyone, because it means essentially we need better managers. We need absolutely better managers to achieve this. And so I think, in practice, the stretch assignment really means on an everyday basis, first of all, being aware what these stretch assignments are. So first of all, identify what a stretch assignment looks like for you as a manager. It can be something really small, speaking at a meeting, covering a new account. But it can be something much bigger, a big goal for your year end or a new target. But I think, it's just first of all being aware of what these are. That would be massive, because actually I believe the biggest issue at first is that we think of the big promotions, but we don't think of the actually daily stretch assignments. So we've called it in the report stretch assignments, but I think, let's not hide behind the sort of the theory of stretch assignments. Let's first be aware of what these are every day for every manager. And then, of course, I think 90% of the job is done, because then you realize it's important, and hopefully you change the behavior and you allocate these in a positive way.
Thank you. So it's really being thoughtful about the practical realities as well. Stephen, sticking with the practical theme, what are your thoughts about organizations translating these practical actions when we're moving into that hybrid working environment?
I think it's a really good question. I think there are real benefits to be learned from our existing experience, but what we've got to guard against when we go back to more hybrid meetings with some people in the office and some people remote is that we don't foster a kind of in-crowd, out-crowd kind of way of working, and that meetings are run in a way which does continue to draw people in. That takes slightly different chairmanship skills than might be possible or needed for either a situation where everybody's in the office or everyone is remote. I think the idea of auditing the conduct of meetings is going to be very important. To ensure that voices are heard, that contributions are appreciated. Because on a day-to-day basis, that's exactly how you kind of identify your talent, and you ensure that everybody can find those new opportunities. I think the on-ramp and off-ramp work is also very important. We've had some real success in retaining people who've left for a while and come back into the firm, and indeed they've been promoted and made really important contributions. That's tended to be best where you've got managers who really do have that competence as well as the people skills. But let's be honest, not everybody has that fortunate position of having a manager who is as supportive as they might be. And there, I think we can supplement things by having advocates. So if your talent base actually has somebody else who's kind of looking out for them, I think that can also help to identify opportunities across the firm in different areas as well, so that as a management team you're talking about all of that. So some practical things which I think are really going to make a difference. And I do hope and believe that flexibility, as you said earlier, Vivian, is no longer seen as a gender issue, but is something that can be valuable to everybody.
Thank you very much. I think we've learned a lot in terms of the flexibility, and it can take many forms as well. Grace, can I come to you? You've talked about some of the behaviors that are already in place, which are very helpful. One of the questions that's come in is around mentoring, sponsoring, and advocacy. They're all useful tools and support diversity and inclusion. Do you see them being used well in financial services companies?
I think, Vivian, it comes directly out of the report that there's mixed evidence about how mentorship, sponsorship, and advocacy is being used in companies. And I think we know too little yet about what it means to actually build an effective advocacy program, because most people don't actually look to see whether or not it's been effective. So there isn't any evidence that I can actually draw on this morning, which is unfortunate. I think given the number of women who I met and the mixed experiences that they relayed, I think it would be useful for the industry to reflect on how can we actually build a program. And if I was to choose one, I would choose an advocacy program. So how can I actually build an advocacy program that has momentum and that has buy-in, which is sustained, and that the people who go through it, and I strategically say people, because I think, any talent that's coming through organizations need advocates. I think women tend to have advocates much less often than men, unfortunately. But that the people who are actually going through it have a good experience in terms of it opening their opportunities. And it doesn't just become a process box ticking exercise that ends up on a website to say the program is there, but the people inside the organization know it's not effective.
I think it's a really important one. There are so many programs that are available, but are we actually ready for the outcome of those programs? And are organizations supporting post the program, not just during the program as well? Grace, I've got another one for you, if you don't mind. You talked about acting against group speak. What are possible tools managers can use to guard against this?
Yeah, so when we think about groupthink, I've often been asked to audit meetings by people who are managing directors, and when I audit the meetings, one of the first things that I often say is maybe you should say less. So maybe the opening shouldn't be for you to share all of your ideas about how a decision should go, and maybe you shouldn't just allow the meeting unfold with whoever speaks the loudest and who is the most extrovert getting to be the ones to dominate the meetings. So very simple techniques like a chair coming in and saying, this is a decision that we're making today, and I want to hear from everybody. I'm going to leave space for everybody to talk. For the chair to call on people randomly, for example, rather than using kind of hands up mode. And also for the chair to be open to accept communications in other fashions. If you're somebody who is sitting in a team today and you don't feel like you're part of the group and you feel like an out group, it is actually harder to speak up. And as a manager, we might get frustrated that individuals aren't speaking up in a meeting as and when they want them to do. But reflecting on what brought them to that experience, I think at this juncture in time is really, really important. So, Gwyneth mentioned the idea that virtual meetings have now become much more inclusive. And for a lot of people who have said the same thing to me, it's because the chat is now open. So people get to put their thoughts into the chat rather than necessarily having to speak up. And secondly, they get to communicate with the chair beforehand in a way that's not seen as unusual as it was when we were all face to face. So when I think about the kind of the fixes for groupthink, it's really about training the manager to be somebody who's trying to bring the voices of all talent to the table, rather than being the person who's actually going to speak the most, and giving them small and subtle techniques to use to ensure that a certain few people don't dominate their meetings.
Thanks very much. Sheldon, I wonder if I could ask this question to you that's come in through Slido. The role of improving soft skills has been highlighted, but what do you think are the key soft skills that need to be developed?
Yeah, it builds a little bit on what Grace was just saying. The first thing is empathetic listening. So to take the example of meetings and where different types of people are not being included in meetings, it's usually because those meetings are characterized by a lack of listening. And people are more concerned about what they have to say than listening to what others have to say. So I am an extrovert. I was taught very early in my career that I like to speak a lot. And I was taught to pause, just take a breath before I speak in certain settings. And I just lift my tongue to the top of the roof of my mouth and it stops me. And that allows me to think and listen before I speak. I think that's one of the important soft skills. I think the other soft skill is what I'd call being able to challenge. And I think this is a soft skill which we all are afraid. We can all be very polite. And by challenge, I don't mean aggressive or coercive or instructive. I mean genuine constructive inquiry. And I think being able to be challenged is a soft skill that leaders need as well. So being open and transparent and willing to allow people to ask you questions or to raise issues and challenges. So having a friendly but challenging and constructive inquiry environment, I think, is also a soft skill for managers to try and develop.
That's fantastic. We were exploring something like that in a leadership group meeting recently. It's a constructive friction in order to move things forward, and we all need to be open to that and receptive as well. Sheldon, can I just take a change of direction, we did refer a little bit earlier to the listings framework. Nikhil had mentioned that as part of the FCA's regulatory work on D&I and the listings framework, that you'll be exploring whether to make diversity requirements part of the premium listing rules. Obviously, I appreciate it's still very early days, but are there any thoughts that you're able to share with us on that at this time?
Sure. It's very early days, but I mean, effectively, I think NASDAQ has been looking at this as well. And what we'll be looking at is whether or not we require premium listed issuers, either with a soft or a hard obligation, to have certain targets around representation at board and possibly executive level. The key questions, in a sense, are what types of representation one might look at. So gender is one, I'm sure, which will definitely be part of the mix. Do you do that wider in terms of ethnicity, in terms of other characteristics such as LGBT, and so on? So I think some of the questions are around what type of representation you have there. I think it's important, though, to recognise that representation is just part of the story. We want diversity of thought, as set out in the Good Finance framework document. We want to get rid of groupthink, and representation is only one part of that. But you can still have a board which is diverse to look at, but still ends up in a groupthink type mentality. So you need other mechanisms as well, not just representation. But we will be looking at that as part of our premium listings issuer review.
Super. Thank you. Watch this space. Last question I'm going to take to you, Grace, if you wouldn't mind. You've mentioned that the LSE is the perfect place to launch the Good Finance framework. Can you say why?
I should clarify if anyone's listening from my LSE, I meant the London Stock Exchange in this instance. Yes, because I think, one of the main messages to come out of the Good Finance framework is the need to evaluate the D&I initiatives that we're using in firms, so we are sure that they're actually having an effect and actually not having a backfiring effect. And I think what the Good Finance framework has convinced me also is the need to really consider intersectionality in those evaluations to make sure that everybody's boat is being lifted and some people aren't being left behind. And I think, the London Stock Exchange is the home of data, and it is the home of data science when I think of it. So in some ways, we are, I hope, moving to a place where we're going to employ the ethos of London Stock Exchange to evaluating these really expensive initiatives on outcomes that will be hard to measure. But, this is the financial and professional services industry, so handling uncertainty in a quantitative framework isn't that difficult.
Super. Thank you very much. Thank you very much to all of our panelists for your contributions today. I found that really interesting and thought-provoking. Thank you for taking the time. Some of the takeaways that I've noted down are that we need to evaluate our actions for effectiveness, so very important. We also need to move those actions from compliance to culture, and that's very much maturing the model and an essential step in the process. That we can recognize the value of quotas, auditing, and monitoring. We need to recognize value rather than just quotas, auditing, and monitoring. Those are terrific and useful tools, but actually it's the qualitative aspect of this that is so very important. And also the practical behavioral adjustments that have been identified in the Good Finance framework can be used by all organizations. And I think also what's really important is that it will benefit everyone in the financial services sector, not just women. So the Good Finance framework is providing us with new insights and actionable recommendations based on the qualitative and quantitative data and analysis from the many volunteers who've contributed their time, experience, and candor to the ACT program. So I wish to extend a heartfelt thank you to our Accelerating Change Together sponsors and supporters, without whom we've not been able to engage in this important work together. To everyone at Women in Banking and Finance for helping to bring this important thought leadership initiative to fruition. To our partners at the London School of Economics and the Wisdom Council, to the 44 women who volunteered to be interviewed, and the more than 2,000 people who completed the quantitative survey, and of course to the London Stock Exchange for hosting us today. Thank you, everyone. Together, we are applying a gender lens to the business of financial services and the talent that drives it to unlock the full potential of financial services for all. Thank you for joining us today, and enjoy your day. Bye-bye.